But like one week we went out and we spent $400 at Sam's, and that was barely one cart, and then came right back to buy the smaller items that you don't get at Sam's because we don't have a Costco or anything else. And I spent another 300 at the grocery store across from our neighborhood. So $700 to get us through the holiday season. And that is absurd. But when you see things like toilet paper going up in price, salt going up in price, really lower priced goods changing in price, hot dogs, Spam. Like we used to be able to go get a dozen of hot dogs for 79 cents. They are no longer 79 cents, friends. They're like $2. So when you see really basic food staples going up in price, we've got a problem. Inflation is much higher than what it's being reported at. As just coming from the economics perspective of it, I tell people like, how do you feel when you're shopping, whether it's shopping for groceries or shopping for clothing, shopping for school supplies? How do you feel when you have to pay for it? Because I think that gives you a much better idea of how the economy is doing. Because if you don't feel like you're paying a fair price, you're probably not.
Welcome to the Ironclad Underwriting Podcast, where precision meets performance in commercial real estate. I'm your host, Jason Williams, and every week we deep dive into the strategies and systems and stories behind rock-solid underwriting. Whether you're a seasoned analyst, an up-and-coming investor, or a commercial real estate professional looking to sharpen your edge, this show is your front row seat to expert insights, emerging trends, and real-world underwriting tactics that stand the test of time and scrutiny. From market assumptions to debt structuring, cap rates to cash flow, we're cutting through the noise and getting to the numbers that matter. So sharpen your pencils and fire up those models. Let's get to work. This is Ironclad Underwriting. Hey everybody, Jason Williams here. Welcome to this episode. This should be, if my calculations are correct, the first episode of 2026. And I have Frank Patalano with me and Angel Williams with me here today. How are y'all doing?
Yay. Pretty good.
Yay. So, from refinancing to conferences, from a web app to mobile home communities, what are everybody's big plans for 2026? I mentioned a few of mine that I plan on working on or finishing and getting completed, but what about everybody else?
Angel?
So I've come to the realization that when I'm talking to people who are just getting started in the space, the number one thing I always tell them is that when people hear your name, they don't need to think of you as who you are in your occupation. They need to think of you as who you are in this space, whether that's an investor or a syndicator, however you're presenting yourself. And I came to the realization that if that is what I'm telling others, I need to also embrace that myself. And when people ask me what I do, I need to be more forthcoming with, I am a coach, I'm a high performance coach, I'm an investor, and talk about it that way and hopefully get a new level of comfort with it because it's not exactly the most comfortable thing to talk about.
I know sometimes you like to talk about, or when people ask you what you do, you like to flex a little bit. You're like, I don't do anything. When in fact, you actually do quite a bit. So
it's funny you say that because I have a business partner, not in this room, that you guys know, and he jokes that he likes to be the laziest person possible and tries to think of creative solutions in order to solve his problems. I don't think he's that lazy, though he does drive me nuts once in a while. Um, uh, this is a tough one because even when you mentioned some of yours, Jason, I said to myself, wow, I got to write those down and add them in. As you guys know, I'm in a lot of different things right now. We have about 10 different LLCs. I'm a GP in about 10 different deals. We have the virtual assistant business, the boutique hotel business. We're building apps. We're pretty busy. And I was trying to, you gave us about 5 minutes notice about what you want to talk about this episode, which is perfectly fine. We had to, and I mean, I've already written some goals out anyway. My biggest goal is a health goal. I mean, I really need to lose some weight before my doctor forces me to in different ways. That's definitely already on the list. I did not wait till January 1st for that. I started mid-November. I did a 3-day fast, probably the week before Thanksgiving. just to feel good and not worry as much on Thanksgiving Day about stuff. And we'll keep moving forward on that. I've been working out just about every day, which is nice.
So when you
Um,
do a 3-day fast, are you just taking water and
just water.
supplements?
Yeah.
Not eat?
I mean, yeah, supplements too. I didn't even think about supplements, but a couple pills. But yeah, it was just a water fast,
Okay.
and it definitely helps. I mean, we're not used to doing that as much as we could. Fasting has benefits for most people. Um, I made a quick list. We'll talk about travel plans first. I definitely travel a little more than you guys do because I'm in a lot of properties. Most of your stuff for you guys is in Texas, so while that can be a trip, I know because I've driven with you guys a few hours at a time. We're talking a little longer than that. In January, in about two to 2.5 weeks, I'm going to be going to walk a beachfront hotel in Costa Rica. I love the boutique hotel space. I haven't done enough with it. We own one right now. We've tried to build another one. That deal fell apart. And always looking for that next opportunity. It doesn't have to be in the United States. I've been focusing on the international side just because the labor would be less expensive. But
Mhm.
with that being said, there are problems, dealing with foreign countries and foreign taxes and foreign
Language
rules.
barriers.
Yeah, it's definitely barriers. It took us a solid 9 months to open up our first bank account in Dominican Republic, stuff like that. Yeah, little things. So February, we actually did a 1031 exchange. We sold a property in Rhode Island, and we bought with a partner. We bought a 12 unit in Nebraska. Just continually spreading out. One of my jokes is I want to do a deal in all 50 states. That's a long-term goal. Even I'll even do one in
Except for
California if
California?
we can make.
Oh
Yeah,
my
yeah, in
God.
California if we can make money. It can be a flip, whatever. I'm
Maybe
sure we'll
retail
pay.
space.
I'm sure we'll do the tax hit on that too. But what's nice about the February trip is that from Nebraska, the goal is to get to Utah, see you guys, best ever conference. It's probably arguably my favorite conference all year. People ask, it's pretty close to best ever. I like it a lot, especially if you're in the larger multifamily space. It doesn't have to be syndications, but they do have syndication stuff at the
And
event.
and Ironclad is sponsoring Best Ever, so we will have a booth. We haven't
Nice.
picked our location yet, but we will be there with a presence. So, and I'll talk
Yes.
about a little bit of that here when you're done.
Yeah, yeah. So March, I'm thinking about I have properties in 12 different markets right now just in the United States. So I try to get to every property once a year. So the goal in March is probably to hit the West Virginia property and maybe some of the South Carolina properties. In April, I plan on going to Latin America because I have not seen or met with our VAs on the Latin American side. In the fall, we went to Asia, and I got to meet people in our office in India, which was really nice. And I went there, Angel, during your event. It was like 3 a.m. in Kolkata, India, when I was speaking. I don't know what time it was in Texas,
I
but
don't remember. Well,
yeah,
the girls in South America are spicy.
yeah,
The
yeah,
VAs are. I love them.
yeah, yeah. So I was in the Philippines in October as well. So we're gonna head down to Latin America just because I haven't been down there. My partner Pedro's been down there, and then in May I'll be speaking at an event in Sarasota. And maybe at the beginning of June, I'll probably be back down in at the hotel in Dominican Republic. So we'll see on that. For main goals, uh, I we have a GP deal that we've been trying to sell. We've owned it for coming up on just over 6 years. It's supposed to close the day that this is released, maybe. What day do you usually release, Jason?
Wednesdays. So
Yeah.
this one
So
be the
hope
7th.
All right, so hopefully the deal will already be long gone by that day. It's gotten bumped a number of times. It was a long sales period, a long holding period to sell because they're the only ones that gave us a number that we're willing to work with. So the goal at that closing is that everybody is going to just about get the numbers we had originally um, planned,
Projected.
Rejected.
underwritten. There you go. And which is pretty nice, especially in this market. Obviously, we know it's pretty hard to do right now. So there's a lot of people that have lost a lot of money in this space, and we're pretty proud of us being able to keep that together. It's a C class property in a C class area, and yeah. Besides that, hope to do a couple JV flips um, locally in my market. We'll see. The last one we lost money on. The market's definitely changed. But now that we know that it's changed, we just have to offer less and plan tighter. We also have a couple of JV deals we plan on selling, and maybe I'll have some cash, which you need to have liquidity in this space, and we've been pretty tight on liquidity over the last year and a half. Um, so
That's no
cash does burn
joke.
a hole in my pocket, not necessarily to spend it on luxury things. I mean, could I go out there the second week of January and buy a Lambo? Yes, I could, but it's not my style. I'd rather put it to work trying to make more money in real estate. I'd like to go back to doing some lending. I enjoyed doing some hard money lending when I had the money. Um, Going all in on the Dominican hotel kind of hurt my liquidity on that. So 3 or 4 years later, we're back to a good position if these things close next week.
Yeah.
And yeah, that's and also I bought a program to do business buying. So I think that the real estate space is definitely a little overheated sometimes. So I feel there's still some opportunities in some other asset classes and other investments. I'm not predicting Bitcoin's price next month or next year or anything, but there are some small businesses with people that are looking to retire. So if we can pick at least one thing up, it'd be nice. Just to spread around. So that was a solid 7 or 8 minutes. Jason, you asked about some goals, and my 2026. As you know, I'll be super busy. I will definitely be hanging out with you guys at least once, if not twice, in person, and we'll go from there.
So you usually come to Texas to visit your properties here anyway, and we hang out
Absolutely, yeah,
then.
yeah. That'll probably be in the fall.
Yeah, and we hang out at Best Ever in Salt
Yep.
Lake.
So like I said,
So a
twice
couple of
is
times.
a good is a good expectation. Plus, we also have the mobile home park we're working on,
Yep.
which I'm not sure if that'll be an extra special third trip or not. We'll see.
I'm on one.
They're
Yeah,
bringing a
one.
breaker.
That's one of our goals. Is we're hoping to break ground, and we're estimating what 8 to 9 months for completion. So we should be able to get it done within 2026
Yeah.
and
You let me
begin
know
our
if they're
lease
going
up.
to do some kind of ribbon cutting or something with as much notice as possible. If I have to take a quick
No,
flight.
absolutely.
Well, I mean, if there's a ribbon cutting, you'll be a part of it. Otherwise, we probably won't do one. So,
Well, thank you.
Well, and I think
uh,
too that like just for anyone looking at getting into development, just know up front, it takes so long. Like you think it's going to be snap, snap, and it's nowhere near that.
I joke that when you're building anything, especially development, it takes twice as long and costs twice as much as what you expect.
well, I don't mind it twice as long. I just don't want it to cost twice as much because I mean that took all of our liquidity as well. So,
Yep.
Yeah. And somewhere along the way, we agreed to a budget that I don't remember agreeing to.
Yes, I had
Like,
to take a snapshot of it and send it to you. It's like, unfortunately, this is the number we had already approved.
it's like I didn't know we approved that, but okay, I guess we did. So,
well, so in
so
word to the wise, whatever you approve is what's going to get spent, if not more. So,
Absolutely. Oh, they saved us money, Angel. What are you talking about?
so the mobile home community is a big one for us, for all three of us, because we're all partners of it. Um, we're also all working on a refi, which is hopefully going to pan out and be done in Q1 of next year, or when you listen, it'll be Q1 of this year, 2026. And this has been ongoing, and we talked about refinancing last week a bit, but this has been ongoing since like May or June of 2025, and we're just now starting to get traction and get something going, which I feel comfortable with, and that's
I mean, there
putting
were
us into
reasons
next
why
year.
it took so long. I mean, it's a smaller market. Interest rates were not working in our favor, so we were kind of stalling even if we didn't want to. And now rates have gotten a little better. And then we may have had an agency pull the rug out from under us at the end of the year because they didn't have to close, stuff like that. But we're not giving
But
up.
but but we also had stellar property management performance over the last 6 months that
Yes,
really boosted our NOI significantly, which got us the proceeds we needed to get out from the other debt that we
this
had.
is a
So,
no-brainer refi. Any bank should or lender should really love this deal.
yeah. Well, and I would say too, like, this reminds me a lot of like the credit card fiascos and snafus that people went through, say, like right after college. You're afraid to call the credit card, but it's not like they can actually hurt you. Like, they can financially ding you, but they can't actually physically harm you. And getting on a call with the bank and emails with the bank, we were able to secure an extension, even though we were out of extensions. So,
and they've declined them before.
So don't be afraid to reach out to your lender, like, or your lender broker, whoever you're working with, like, get everybody on the same page because we didn't ever think for a moment we were going to get any kind of an extension.
I figured once we had some good solid refi in place that they would have extended. Because I mean they wouldn't want to take over a property.
No. And they don't want to lose money. And it's not like we've ever been defunct or
Yeah.
defaulted or anything.
Yeah.
We've made all of our payments on time.
Yep.
Yeah, and since we're extending with our current lender, which is bridge debt, they like to, or they did to almost double our interest rate for this extension to get it refied. But that's what we had to do. So
Well, I mean, the good news about that is that if we needed to do some kind of emergency financing, it would have been more expensive. Plus, there would have been a lot more points and stupid junk fees and everything else. So
yeah. Um, Another big one you already mentioned, best ever conference, Salt Lake. It's going to be February
16th.
18th
He's the
ish,
18th.
17th, 18th, 19th, maybe
Yeah, that week.
18, 19, 20, whatever. It's that week. I think it's 18, 19, and
18,
20.
19, 20th. Yeah, that's what I got on my calendar.
Um, I am going to be debuting my app and signing up beta testers. So I plan on having it at least in a presentable state for that. So if you're interested in that and getting away from Excel and using a web app to do your underwriting for you, then look me up. I try to be at the top of the escalator, but I haven't picked my spot yet, but I'm going to try and get that spot again. So if you ever need to know where is Ironclad Underwriting booth, it's like right at the top of the escalator or really close to that. So
Just look for a bow tie guy.
yep. I got my bow tie on. If you're watching this on YouTube, you can see it. If you're listening to it, you can imagine me lifting my chin up, moving my beard out of the way, and flexing my bow tie.
Funny.
Um. So yeah, those are my big things. I'm concentrating the most on the web app, and then I'm gonna redirect my coaching toward the web app and move it away from the Excel version of my model and concentrate more on the web app. And then I'm also doing custom models for people as well. I've always done custom models for people, but now that I have the web app like for a good foundation for it, then that's even better for people because custom models can get super hairy, especially in Excel. So,
I mean, with
um,
that being said, let's be honest, if the right deal falls in your lap, you guys are still acquiring real estate. Without mentioning anything about the deal, I mean, you guys had an email come in yesterday of a possibility in Texas that who knows, there might end up being a raise on it or whatever else,
yeah.
and maybe not. Yeah, it has to be the right deal with the right. I mean, we haven't even seen the underwriting yet, so.
So yeah, if there is a deal that comes across our plate, we will definitely pursue it. Um, Am I actively looking for them? Not right now. Our financial advisor suggested we hold on to some liquidity just for a rainy day instead of like going out and instead of buying a Lambo in February, going out and buying another apartment complex and taking all of our liquidity away. And then we have to starve until we get
Yeah.
cash flow in. So, I mean, he recommended we don't invest in 2026 other than our current existing projects, but he's just an advisor. He's not my parent. And
Actually, I was
I've,
told I couldn't invest in anything for 6 months. That is what I was told. And I'm like, it's really sad because I'm that person that I always want our dollars working for us, unless it's a purchase like the Sprinter that we needed for family. That's different. And we were able to use that as a business expense too. Like, but I like to have our money working for us. And I think it's ridiculous and kind of stupid to not have your dollars working for you. But at the same time, you get in this crunch where you think, holy night, all of a sudden I feel super poor. And for those of you out there thinking, oh, this is just some girl that is being a total jerk right now, we don't have any cash flow. We haven't had anything pay out in 3 years when it comes to the real estate other than our residential portfolio.
Which is
So when
small.
you're, yes, so when you're getting into the space, realize that it is super big time feast or famine, and you've got to prep for that. And I think that's something you should be doing at the beginning of the year is looking at your expenses and deciding what kind of cash flow you need each and every month and looking at investments that will provide cash flow, not just wealth build, because they're two very different things. Our wealth is building. our cash flow is yikes.
Yeah, no,
Yeah,
and I
this
think it's
is.
the same for me. One of the things I really think about is the concept of cash flow versus equity. I mean, obviously, I love cash flow, but like you're saying, I haven't seen a lot of it in the past year or two because as an entrepreneur, your dollars go up and down a lot in the course of a month. I mean, yeah, you might have got some kind of distribution on one of those properties, but then $1,000 new roof that needs to be replaced somewhere. So it's like the tenants don't care that you don't have the money. It's your responsibility to provide them good housing, and you need to find the money. And it usually comes out of your cash.
Yeah.
Um, one of the
And
big
and a
things, yeah,
Lambo
Jason.
won't put a roof on a house.
No, and if you drive up in a Lambo to your property that has a crappy roof on it, some people are going to be pretty upset.
By the way, I'm not a Lambo person at all. I'm more of a Corvette kind of guy, but I mean, but I'm just talking about the concept. So,
Yeah,
like
no,
you
we
said,
understand.
my my equity has gone up every year. My net worth has gone up every year, but you can't eat equity, is one of the things I've been saying lately.
Yep.
You can eat or you can feed yourself with cash flow. You can't feed yourself with equity unless you're pulling the equity out all the time, which doesn't help either. So the concept of having some cash and putting it to work, even if it's smaller investments that you know are going to cash flow something, you can use that to live off of.
Yep.
Yeah.
Our travel plans. I mean, other than going to Waco, where the mobile home community will be, um, DFW for meetups. Salt Lake City is our biggest travel of the year usually. I don't have any other plans. Angel, you've gone places without me. You've gone to Phoenix and other places for
It kind
events.
of depends. Like, I'm still doing a lot of virtual events, and so I'm a speaker for virtual events, but getting on stage for physical events can be a little tougher. So if you're out there trying to be a speaker, you're not the only one seeing doors close in your face. Um, it's just hard. Choose your heart though. So unless I'm going to be speaking at an event somewhere, I'm probably not going anywhere this year just because the cash flow is tight. And a lot of us have to fund our own ways until you're like a super big speaker and they're willing to help fund some of your travel or your room. Um, we're not there yet, or I'm not there
Oh,
yet. Maybe Jason's there.
the whole
Maybe he's ready to
in-person,
there.
I haven't been paid to speak of that, but the in-person conference industry is having its issues. There was a big event that was supposed to be happening in January that just got canceled. It would have been the first event that I had gone to like that in 6 years, and I was really disappointed. And the ticket sales just weren't there. I mean, there are a lot of newer programs and newer people that are trying to put on events. There's a lot of competition in the space, and we know it's very expensive. I mean, I've seen some people that have written books that got speaker fees. One guy probably got a speaker fee of $200,000. He's a big national, but that's not where
It's
I am
norm.
or where you guys are at any time soon that I know of, unless you have some book that you're gonna be releasing next week that you didn't tell me about.
No, and the
Actually,
teacher
I
and me
do
keep
have
giving it out free.
I do have a book that I've been writing, but since I started doing the web app, it kind of got put on the back burner. Um, but once I get the web app up and running and can find people to support it other than me, I will try to take that off my plate, at least like the development part, and go to writing and working on my coaching again. Um, yeah, I haven't gotten paid to speak at any events, so
No, and
I
that's
don't know
not
if I
on my
can.
plans. That's a lot of work too. I mean, that's not in my plans at all. I do like you guys. I do have some coaching. I do have a few people that pay me a certain amount every meeting or every month just to help them be better in real estate. But I'm not running around just like I know you guys aren't running around promoting yourselves everywhere as a coach. Because that's a whole different amount of time frame, stuff like that.
Yeah.
Yeah.
No, we were actually having a conversation just the other day with someone and talking about how that's something we've been noticing. So as the economy ebbs and flows in the space,
Yep.
you'll see some ebb and flow in the coaching industry. And there's a lot of people trying to enter the coaching industry because what they're seeing is that you can actually gain cash flow and make money by being a coach versus investing right now. And I think a lot of people wind up going down that road and they lose touch with the industry. I've seen it in teaching online. It's not the same as being face to face. I haven't necessarily lost touch, but there's some names that aren't on the tip of my tongue like they used to be. I used to be able to talk about David Ricardo and Adam Smith and tell you what they were doing and everything about them, and I don't necessarily have that same capability. And so I think that regardless of where the economy is ebbing and flowing, you got to stay in it to keep your mind active with it and stay abreast of what's going on. So for people out there looking for a coach, make sure you're exploring all of that, because if it's not someone that's active in the space, they're going to have a hard time really helping you understand what's going on in the space because they're not in it anymore.
Yeah, especially with the changing market. And speaking about that, I mean, we talked about goals, we talked about a little bit about travel plans. How about since we're at the end here, how about a couple of market predictions there, Jason? Throw it out there, see what you got.
No way.
So I don't do market predictions. And instead, what I do is I have my network of people that I reach out to periodically and get what the conditions are looking like. And that's how I get the most up to date information for my underwriting. And I've talked about this many times before. My crystal ball doesn't work. It just kind of sits in the corner and collects dust. So
You don't polish
um,
it once in a while?
no, I probably should, but um, I will say, and it was actually a huge pleasant surprise that insurance in Texas on both of our properties, both of our big multifamily. When I got the insurance bill, I was like, oh, okay, that's about the same as it was last year. And then I realized that that was for both properties, not just for one. So it was like half what it was. It was like 850 or whatever a door last year, 950. Now it's like 450 a door. So we're getting insurance coverage significantly cheaper than we got last year. So that's a huge surprise that I wouldn't have predicted. I knew it was going to come down, but not that much. So
Yeah, we had like a 40% decline on average.
yeah, 40, almost 40 to 50%. Yeah.
Yeah.
Like when I saw the bill for 72,000, that is like what we were paying. I think we paid like 69,000
For
for
one.
one property last year. And when I saw it for 72, I was like, oh, that's not too bad. And then I realized that was for both properties.
Yeah,
Which was
they drive me nuts when they list both properties because they're two different LLCs.
And well, I work with them on that. Doesn't mean they'll get it right, but at least that they're working with us and getting us what we need, so we can iron out all the details later.
Well, I think that's another important reason to have a really good relationship with your insurance broker. Yes, your lender is also your biggest partner, but you need to have a really good relationship with your insurance person too, because when we have questions, I can just text them and they always respond. Um, and so that's been really nice. And when you're building your team, you want to make sure you've got that person on the team that has that capability. That's another thing we were talking about the other day is I was kind of giggling about it because now it's kind of a weird flex. Um, I've got I've got ways to contact, and I mean like they'll answer me back with a lot of really heavy hitters in the space. And I think that just happens from being in the space with some level of consistency and continuity. Um, because Frank, I think you can say the same thing, Jason. Of course you can because you've got me. But I think that if you are consistently showing up and you're showing up strong, you're going to get some level of connectivity with the space, and that can be really important, especially in times when things are a little bit leaner.
Well, I mean, we have Marvelous Mondays that is 5 years running strong. So yeah, I can definitely see that.
Yep. So what are your goals, Angel, for this next year for
Do
2026?
you
Angel
want to say
doesn't
mine
like
first?
predictions and she doesn't like goals.
Oh,
God, Angel.
so okay. Honestly, the best way to really judge where an economy is going is to look at necessity items and look at the pricing of necessity items. Because number one, when you're in the grocery store, the first thing you're going to do is you're going to subconsciously switch between normal goods and inferior goods. So you're going to go from 3-ply toilet paper to 2-ply to 1-ply if you gotta. You might even take on the sandpaper stuff. I don't know, personal preference. I don't know what yours is. But you're going to be making those changes and not even realize you're making those changes. But when you see things like toilet paper going up in price, salt going up in price, really lower priced goods changing in price, hot dogs, spam. Like we used to be able to go get a dozen of hot dogs for 79 cents. They are no longer 79 cents, friends. They're like $2. So when you see really basic food staples going up in price, we've got a problem. Um, Inflation is much higher than what it's being reported at. And that's because they keep changing it definitionally to fit whatever script is being played out at that point in time. But I look at how it feels when I'm at the grocery store. And I'm going to be honest, like, I can't pay in cash. I have to put it on a credit card. But like one week we went out and we spent $400 at Sam's, and that was barely one cart. And then came right back to buy the smaller items that you don't get at Sam's because we don't have a Costco or anything else. And I spent another 300 at the grocery store across from our neighborhood. So $700 to get us through the holiday season. And that is absurd.
My stocks, thank you.
So I was looking up the hot dogs we used to get at Walmart are now $1 instead of 79 cents. But I will say I've seen comparison of grocery bills from this time last year and this time this year, and it's actually cheaper this year than it was last year.
That's good.
Doesn't mean it's 2% or 3%. It means it's 10% instead of 17%.
So I'm just saying that some prices are starting to come down, and that's with all the tariffs and everything else in place too. So I don't know, but that's a whole different conversation that I don't really
But
want
no,
to get into on here.
and I, as just coming from the economics perspective of it, I tell people, like, how do you feel when you're shopping, whether it's shopping for groceries or shopping for clothing, shopping for school supplies? How do you feel when you have to pay for it? Because I think that gives you a much better idea of how the economy is doing. Because if you don't feel like you're paying a fair price, you're probably not.
I think it's hard for people to determine what a fair price is nowadays anyway.
No, I agree.
So
Well,
do you
besides
have
that,
any
Jason, yeah,
I was going to say, do you have any business goals, Angel?
I
Want to
mean,
want to promote
I'm your
your
wife.
coaching
Like,
some more? No, your goals, not my goals.
I think Angel's trying to say that yeah, your goals are her goals.
I do want to get way more comfortable just helping people from an actual, like, coaching standpoint. Um, and to realize that, number one, I do have value, and that value is worth something. And I have to stop giving all that value away for free. So that's probably my biggest goal this year.
Okay.
There you go.
So yeah, it was a great last year. It was what we started this podcast roughly in June. I think we're about 30 episodes in. I think it's going pretty good, and look forward to another good year, 2020, and we'll catch you next time. Bye. And that's a wrap for this episode of the Ironclad Underwriting Podcast. If you got value from today's conversation, make sure to subscribe, rate, and share the show. And don't forget to connect with us on LinkedIn, YouTube, Facebook, Instagram, or check us out at our website at ironcladunderwriting.com for more insights and updates. If you have a question, a deal you're analyzing, or a topic you want us to tackle, shoot us a message. We'd love to hear from you. Until next time, keep your assumptions grounded, your models sharp, and your underwriting ironclad.